everyone, today I will explain the topic about accounting for business enterprises using this mind map. And let's go through each section step by step. Let's start with the first subtopic, which is manufacturing. Let's begin with the definition first. A manufacturing account is a financial statement prepared by manufacturing business. Its main purpose to calculate the total cost of producing goods during a specific accounting period. It helps the business to determine the cost of goods manufactured. Next, we compare trading businesses and manufacturing businesses. Firstly, trading businesses mainly buy and sell finished goods only. They use merchandise inventory, and the cost determination is usually simple because it is focused on purchasing and selling finished goods. And profit is added to the purchase price while they want to setting the selling price. Their financial statements include a trading account, profit and loss account, and financial position. On the other hand, manufacturing businesses produce goods from raw materials. They have three inventory types, which is raw materials, work in progress (WIP), and finished goods. The cost determination is more complex because it needs to account for raw materials, labor, and overhead in the production of finished goods. And selling price includes profit added to the manufacturing cost. The financial statements include a manufacturing account with the trading and profit and loss accounts. And let's jump into the elements of manufacturing costs. First, we have prime costs. Prime cost is expenses directly related to the production process. Under prime cost, we have direct material, direct labor, and direct expenses. What is direct material? Direct material is the raw materials directly used in production. Let's say we want to produce a cake, so the direct material must be flour, eggs, sugar, and many more. Direct labor is wages paid to workers who make the production. Let's say we can say a skilled worker who are make the cake. And we also have indirect costs, such as indirect labor, indirect materials, and indirect expenses. Indirect labor is a workers who support production but don't directly make the product. Indirect materials, items used in the production with the minimal cost. Indirect expenses, costs not directly linked to the production, like rent or utilities. And next, we have loose tools. What is loose tools? Loose tools are small tools and supplies used during production. They are not expensive and are often considered part of indirect materials. And next, we have work in progress (WIP). WIP refers to partially finished goods that are still in production and not yet ready for sale. And also we have factory profit. Factory profit is calculated by adding a fixed markup on the manufacturing cost or calculating the market value of goods produced minus the manufacturing cost. And lastly, we have allowances for unrealized profit (AFUP). This is a provision made to remove any profit that hasn't been realized through actual sales to outside parties. It ensures the company doesn't overstate its profit. For the second subtopic is branch and head office. What is branch and what is head office? Branch handle operation in a specific region, while head office is responsible for central control and administration. There are two types of branches, which is selling agency branch and also autonomous branch. What is selling agency branch and what is autonomous branch? Selling agency branch is mainly sell goods on behalf of the head office. They only sell goods that they are received only from the head office, and they does not purchase or produce goods on their own. While autonomous branch, they are independent. They can sell goods, they can purchase goods, they can manage their own inventory by their own, and they can prepare their own trial balance and financial statement by their own. Lastly, for current account. Current account keeps a record of daily financial dealings between main company and branch, and it helps track money owed or due between them. For the third subtopic is non-profit organization. What is the definition of non-profit organization? Non-profit organization is an entity that provides facilities and services for its member, not to earn profit but to serve for a purpose. For income peculiar to non-profit organization, they earn income from unique sources like annual subscription, entrance fees, donations, government or private grants, or even life membership subscription. And they use this income to sustain their organization operation, not to earn profit. For accounts of non-profit organization, there are two main types of accounts used. First is receipts and payments accounts. Second is income and expenditure account. For the receipts and payments account, this shows actual cash received and paid. For income and expenditure account, this is like profit and loss account, but for the non-profit, it shows actual income earned and also expenses incurred. For differences between profit and non-profit organization. Now, let's compare profit organizations and non-profit organization. Profit organization purpose is making profit. Funding comes from selling products or services. Taxation, they must pay the taxes and reporting they report their performances to shareholders and investors. Financial statement, statement of profit or loss and other comprehensive income, statement of financial position and cash flow statement. Net worth, profit or loss is transferred to the capital account. For non-profit organization, purpose is providing services, not earning profit. Funding comes from donations or grants. Taxation often qualifies for tax-free fundraising, reporting to the board of directors, financial statement, income and expenditure account, statement of financial position, statement of cash flows, and statement of functional expenses. For net worth, surplus or deficit goes to accumulated funds, not capital. That's all from me. Thank you.